Hello everyone and welcome to this swing trading stock market outlook for the week of June 19th. This is Corey Mitchell with TradeThatSwing.com, and keep in mind it is a US holiday on Monday, so the stock market is closed. So the first day of stock trading will be on June 20th. And each week I go through the same process, just looking at the overall health of the market. That helps me determine whether I want to be or how aggressively I want to be trading stocks, and then I will look for individual patterns and triggers. And the stocks I am watching are covered in these lists here. You can always find this article usually on the first page of the website, TradeThatSwing.com. It's updated each week. And so I have a best swing trading stocks for June. That's just high momentum stocks that you can look for setups in. Then I also run a scan each week where I'm actually looking for patterns, mainly contractions, rounded bottoms. Sometimes we'll see some double consolidations in there as well. And so checking out those cup and handle patterns. So that's an updated list as well. And then also during summer, sometimes I slack off a little bit and I like to use my other lists. And I can look through those. And if you're not actively watching the market as much, maybe during summer, I also like these lists because they're a little bit longer term trades. So some of these look at more fundamental type trades as well as stocks that are performing well. So these ones can be interesting, and I own a couple off these lists as longer term swing trades. And let's get into the indices. So I look at 4 different US ones. So these are these ones here. And let's take a look at it. So we have the NASDAQ, the S&P 500, the NYSE Composite, and the Russell 2000. So each one of these look at a little bit different segment of the US stock market. Then on this side, we just have some other things that may be of interest. So let's look at the NASDAQ. Strong uptrend. This has been going on for a long time. Every week it's been NASDAQ in uptrend. The other ones not quite as strong. The S&P, as of a couple weeks ago, broke out strongly out of this channel it was in. It's been running to the upside, so strong uptrend there. The NYSE Composite, it had been stuck sort of in this ranging environment, was moving back toward the lows, but we've had this strong surge back up. So most recently, you have a low point here, a high point, a higher low point, and a higher high point. So this is in a short-term uptrend. Even though we're below this prior high, most recently we're moving in an uptrend. The Russell 2000, same situation, was very weak, was hanging out around the 2023 lows, strong move to the upside. Again, we're starting to see higher swing lows, higher swing highs. So short-term uptrend, even though it's below the 2023 highs, at least for the short term, most recently it is moving in an uptrend. So that is good. The Canadian index stuck in the middle of a big range. So I wouldn't we have one higher low here so far, but we haven't moved back up to make a new high. This high was slightly below, so I would still say this is a range, and we're just kind of in the middle. The Japan index I threw on here just because it's the second, or one of the strongest indexes. The Japanese market, the Nikkei, is one of the best performing indices of the year so far. The NASDAQ is the top performing index, and Japan's right up there as well. And this is EWJ, is the ETF in the US. Gold, I just kept it on here. It's weakened off a little bit, but has still had a decent 2023. Bitcoin pulling back quite a bit now. It's been a pretty sustained down move here after this big rally, so we're going to see if it breaks out above this channel lower that it's been moving in. So overall, from a price action perspective, mainly focusing on the U.S. indices here, NASDAQ 100 continues its uptrend, S&P 500 in an uptrend. These ones are a little bit weaker, but they are moving to the upside. So overall, I would say that's pretty good for a market environment to be trading in. We have at least short-term uptrends in all 4 of these U.S. indices, some really strong, some a little bit weaker, but overall, we at least have that upside momentum. It's a lot easier to make money when almost everything's moving up, as opposed to if we only had one of these moving up, then that means it's a very selective rally. right now, at least recently, everything's been moving up. So that's the kind of environment we want to be trading in. Let's look at the market health indicators, a little bit different signals here compared to just looking at the price action. So this looks more at how the underlying stocks are performing. This is how many stocks in the S&P 500 and the overall U.S. stock market are above their 50-day moving average, just a very crude measure of stocks in short-term uptrends. And you can see about 69% of S&P 500 stocks are above their 50-day moving average. About 67% of all U.S. stocks are above their 50-day moving average. Again, much easier to make money when most things are moving up. And if you have most stocks more than 50% above their 50-day moving average, then that's generally a time when it's going to be easier to make money. When we have these really low numbers, those are usually times when the market is falling. The volume, not super important to me right now, and this is the daily percentage movement of the S&P 500, and small values are associated with uptrends. You can see we have much smaller values than we did during the major decline of 2022. You have these big spikes down, 2% drops, 3% drops per day. We have not had any 2% drops in a long time. I give that a smiley face. That is very good. This is more uptrending type behavior in terms of daily volatility. The NYSE Advanced Decline Line is a cumulative number which tracks advancing stocks minus declining stocks, and I would like to see this stronger. It doesn't get a smiley face yet. It's not horrible, but as you can see, the S&P 500 is well above its 2023 highs. So this was the prior high here. We broke above that quite a while ago, and we've just been running to the upside since. This was, the 2023 highs. We have one here, and we're just hanging out a bit below them. I would love to see that also break out to help confirm this overall rally. This makes a little bit of sense because, as we saw, the NYSE is a little bit weaker than these other indices. So this isn't super shocking that the NYSE Advanced Decline Line is a little bit weaker because it's based on NYSE stocks. But still, we ideally want that to confirm these up moves as well. This is up volume divided by total volume. There has been nothing significant here recently. Ultimate indicator is what are stocks and the setups doing? Are you seeing lots of setups? Are the stocks that you're seeing running? And I am seeing stocks running, and I am getting regular setups, at least a sprinkling of them, and more recently there's been quite a few. Which one is it? The stock watch list has quite a few more stocks on it than it did the last couple weeks. So that's really good to see. Then that's kind of another indicator that just says, hey, we're in a healthy market environment. We're seeing setups, they're working, and that's when you want to be aggressive, is when things are working. Sectors on the move. This would be more so if you want to really focus in on some strong sectors as opposed to just trading anything. Technology, communication services, consumer cyclicals, definitely very strong areas of the market. Industrial is not far behind. And we can look at basically all of these time frames over the last week, the last month, the last 3 months. You have technology, consumer cyclicals. Communication services down a little bit, maybe toward the middle of the pack the last week. Industrials near the top. We go over the last month. Technology, consumer cyclicals, industrials, communication services, technology, communication services, consumer cyclicals, industrials, all right near the tops. These are all top performing sectors over pretty much all these time frames. So those are good areas to focus on. And what am I doing right now? Conditions are good, and I'm willing to keep deploying capital. Ideal is when, just everything is moving up. We don't quite have that perfect scenario at the moment, but I'm still willing to deploy most of my capital in this type of environment. And yeah, things are good, so I'm willing to deploy more capital. And as always, I'm willing to, I day trade Euro USD, I day trade stocks. If you're interested in that, you can check that out. If you're also interested in just passively investing in the background, we have the passive investing ebook, which you can check out, which is just adding to some solid positions every month. We don't worry about the market fluctuations. It's just continually add and let it compound over time. So those are all options, all things that I'm doing in the background in addition to swing trading. So that is your outlook for the week of June 19th, but it's a holiday, so June 20th, and have a great trading week out there.